Hey, good morning, guys. On our Bitcoin US dollar, our head and shoulders pattern is playing out nicely. We have broken down to the downside, and now we have retested market structure. So if you look here, this is our neckline, and we're sitting right there. So what I'm gonna do is I'm gonna go ahead and just draw in our neckline. Be right here. Okay, so you clearly see that we now have some rejection. Now, that doesn't mean you automatically just go short because it's retest. It's because remember, a retest of structure could be an actual zone and not a defined point. So all of this is structure. Okay, so price could push back up in this area, and then we can look for shorting opportunities. So you just have to be mindful of that. All right. Let's go down to the 1 hour time frame. All right. So this potentially could look like a mini bull flag. All right. See the pole. All right. And you got the flag pattern. All right. If we were to break to the upside, this zone is still valid, and it'll be the completion of this particular pattern. All right, so keep this in mind. And also, I mean, there's nothing saying the price cannot come, back up into this region as well too before dropping. But like I told you, don't just run into the market and say, "Oh, well, it rejected. I'm just going to go short." No, be patient and let the um, play out like it's supposed to. If anything, if you're looking to really get short, we already made profit, so we're out. We normally like to take profit at the first touch of the zone because we figure there's a high probability that's going to come back and retest. So we get out and then we look for entry back on the retest. All right, I was asleep. I tried to get back in, but for some reason, the KuCoin futures platform for some reason was offline, so I couldn't even enter in a trade. So I missed this, but I would have entered in here. So what I would do now is I would set a limit order. As soon as price breaches here, I may look to go short to finish out the rest of this extension and get down here into this deeper into this zone, which is market structure back over into this area as well too. All right. So in fact, what we're gonna do, we're gonna just end that here, and then we're gonna establish a new area of market structure there. All right. So this is really target two, target one, target two. I had target two down here, but this is actually target three. So we're gonna change this to three. And all this is lining up uh, with what some is expecting uh, Bitcoin to have further drop in July. Also, happy 1st of July. You made it. So stay stay strong, stay focused, be patient. All right. Allow the markets to come to you and you'll be fine. Um, Continue to accumulate your positions. if you're investing. If you're trading, make sure you're using your rules and you're taking trade based off of rules and not just blindly jumping in the market. Make sure you know your risk before you take a trade. You need to know how much you're going to lose if the trade does not work. If you don't, you're gambling. Always want to approach the market as if you're going to lose. I know that doesn't sound right, but trust me, in the end, you'll be way more profitable. Because if you 100% knew you was going to lose, would you rather lose $500 on a trade, or or if you knew you was going to 100% lose, maybe you would say, well, you know what? If I know I'm 100% lose, I would rather lose $85. Now, you may say if I 100% knew I was going to lose, I wouldn't trade. Well, then you wouldn't make any money at all, right? So what happens is people look at the profit that they could potentially make, and that is what lures them into the market. Instead, you need to look at how much you can lose. And then that brings you to your senses. And then you determine whether or not the risk reward ratio is actually favorable. So a lot of times we risk um, $1 to make 50 cents. That's the extreme example, but you get it. So, but let's look, and let's say you risked $100 to make $50. So that's a little bit better example. That doesn't make sense to risk $100 to make $50 because if you lose, you're gonna need two more wins just to get back to break even. That's not good. But what if I told you? What if you risk $100 to make $500? What if you risk $100 to make 800 or 1,000? All right. So you have a 1 to 10 risk reward ratio. For every $100 you risk, you have the potential to make basically $1,000, or 10 times that. So some of you need to start looking at high probability setups. The head and shoulders patterns are high probability setups. And if you trade them correctly and you have the correct risk reward ratio, you'll be fine. Most people that blow their accounts, and I've blown my accounts numerous times, we blow our accounts is because we are too over leveraged and our risk reward ratio is not good at all. Now, let's say it was good, but we may have been in a tight, we may have been, we may have had a bad entry, not a tight, but basically we didn't enter in a good area, and maybe price pulled back and corrected a little too much for us. And that is enough. If you're too heavy early on in your trade, that's enough to wipe you out. And then price eventually moves to the targets that you had. So make sure your entries are correct. Make sure you look at the chart and you at an area of the chart where if it did pull back, it's not going to be catastrophic. Um, as Oliver Valles has mentioned on numerous occasions, it's better for you to fall out the basement window instead of on the 40th floor window. So when you enter your trades, make sure your entry is that if it goes wrong, it's not catastrophic. All right. So I hope you have a great one. Y'all be safe out there, and happy holidays for this week. And I'll see y'all on the next one.